Welcome everybody, Doug McKay with antiwallstreetguy.com on the 4th of February 2011. Currently looking at a chart, a daily chart of the Dow. We closed above 12,000, which was a area of resistance that we wanted to get above, technically speaking. So let's draw a little line there. Last week we talked about, for some of our short-term traders and investors, that if we broke this low on the 120 trade, the low on 120, which was 11,744, we would exit any positions tied to the diamonds or the Dow. Now, we held the lows that we put in last Friday, which were 11,803. Let's just call it 11.8. Once we got above 12,000, again, that is a technical breakout short term, and the Dow looks good here. We also put out a chart, a still chart, earlier this week on the blog. Here are the notes left over here. Good above 27.55 on a close. Out below this level here. We're going to keep that same stop in place. And a lot of this is for individuals that have not been in the market and that are looking to get back in. If you were to get back in, where do we see high probability? One would be a breakout above 27.55 on the NAS, which we had today, closed at 27.69. In the event that this is a false breakout, if we start to roll over, where do you want to get out to preserve capital? Would be this level here. So we'll keep updating the blog if in fact we break down. All right. Let's also take a look at the SPY, which is an ETF that we track. Again, very similar to the S&P 500, obviously. Once we get above 130 or 1300 on a close on the S&P, that is a good sign. That is a technical breakout for the time being. If we wanted to play it close, we could say that if we were to break the 120 low of 1271, we would be exiting that particular position. Let's also take a look at gold, which, based on what we see technically at this time, the overall trend is still down. We do have this triple top here, here, and here. Again, the overall trend is down, very similar to the chart that we put up last week. Looking at a weekly chart, we can see we broke the trend line, but we did catch a level of support here. Again, I'd have to see us get above 139, which is the high in this candle, or if it continued to break down and made lower lows and lower highs, we would buy a bounce here at 120. Let's take a look now at treasuries, specifically the 10-year. This is a weekly chart here. You can see that there was a nice spike in rates today. And as we all know, as interest rates rise, the value of treasuries go down. As a matter of fact, on the blog today, we have a chart of TBT, which would be shorting treasuries. And I do have a stop there. But in any event, once we broke out above this level, which we did this week, again, that is a technical breakout. How much farther we're going to go here in rates on the 10 before we pull back? If we're just eyeballing this, technically looking at resistance, I'd say probably about that 375 level, maybe 39. All right. Let's also take a look at oil. Let's take a look at the OIH. Now, again, we drew this in last week, this trend line. We're going to keep it here. As price moves up, if it continues to move up, we're going to move up the trend line with it. If we break a trend line and support, we would be exiting anything tied to the OIH. Let's take a look at it on a daily chart. Some of the actual spot price of crude today was down. We're keeping an eye on that, but more importantly, we want to see how the individual ETFs and stocks track that in terms of if they're breaking down as well. We do have a position that we talked about last week. We still have it this week. This was a still chart today that we put up on the post on the blog of XLE. And basically what I'm saying here, if we were to break the low that we put in on 2-1, which was Tuesday, of 71.22, if we were to break this candle here, we would be exiting that position. And again, if for some reason it stopped there and then started to head up, we would play it very similar to what we would do if we were stopped out of any of the indices, which we haven't been yet. And that is we would get back in above resistance. All right, so we've taken a look at the metals. We've taken a look at energy. We looked at the equity markets. Tomorrow on the radio show, we're going to cover some individual stocks that people have mailed in. But overall, the trend in the equity markets right now is long. Gold is down, bad. Bonds is down, bad. Anything tied to treasuries. The high yield junk bonds are doing well. That might actually be breaking out, but the corporates are under pressure, and certainly anything tied to treasuries is under pressure. And the crude energy ETFs are still working. That's it, everybody. Thank you for viewing the blog and listening to the radio show. We'll see you next week. Hopefully tomorrow we'll see you on the radio show and the Anti-Wall Street Show. This is Doug McKay on the 4th of February, 2011. Thanks. We'll see you next week.